Crude oil prices have internationally fallen below $30 a barrel on fears of an impending global recession. And the fears are not unfounded given the fact that there has been economy after economy that has announced lockdown. We have seen what's happening in Europe, particularly in Italy and Spain. We have seen how the US has actually reacted through emergency funds and emergency economic stimulus because of widespread spread of coronavirus across the world. India clearly is no exception. This fall in crude oil prices have wrecked global equity markets, and as I said, India is not an exception. Indian markets has also reacted very negatively to the fall in crude oil prices. But here is the key question. If India imports 80% of its crude oil requirement, why are the markets reacting so negatively? In this case, the volatility is the question here. A sharp fall in crude oil prices is seen by markets as some kind of a disruptor to a demand-supply equilibrium. And if there's a sharp fall and prices continue to fall, as it has been happening over the last 2-3 weeks, then equity markets across the world, including India, are seeing this as sign of a coming global economic slowdown, which will be very deep-rooted. And equity markets clearly do not like slowdown. While crude oil prices are good per se for the Indian economy, because India imports 80% of crude, it aids economic growth. If prices continue to fall, it will aid economic growth. It helps the trade balance. It helps keep the dollar price under check. So far as India is concerned, according to one estimate, a $15 drop in crude oil prices will probably result in a $10 reduction in this current $10 billion reduction in this current account deficit annually. But those are estimates. But be that as it may, the key question here is, if crude oil prices are falling, if India imports 80% of its crude oil requirements, why are the markets reacting so negatively? Markets are reacting negatively because this is seen as an indication of a global economic slowdown. But there are a couple of positives as well. A fall in crude oil prices means that the retail prices of petrol and diesel that you and I fill in petrol stations actually have come down. This is despite the fact that the government has actually raised excise duty on petrol and diesel, and despite the rise in taxes on retail prices of petrol and diesel, these prices have fallen at the pump gate level, which is primarily because crude oil prices have fallen. And as we know, petrol and diesel prices are nowadays market determined. These are not administered by the government or the state-owned companies. There is another positive as well. India is building its strategic petroleum oil reserves, like most countries are. And by 2020, if all goes to plan, by end of 2020 or maybe early next year, India should have a capacity to store 87 days of crude petroleum reserves, crude oil reserves in the strategic petroleum reserves. Please remember, strategic petroleum reserves are essentially state-owned initiatives that in which crude oil is preserved in caves deep underneath the Earth's surface. India has been building these over the last several years, and by 2020, as I said, the estimates are that India should have petroleum reserves worth of 87, that will be enough sufficient to meet requirements of 87 days. This includes 67 days that refineries also carry with them. And why is the fall in crude oil prices an opportunity for India to actually top up its petroleum crude oil reserves? We now hear that India probably could be talking to various crude oil source destinations to actually leverage this sharp drop in crude oil prices, buy crude oil prices at a lower price, and top up its strategic petroleum oil reserves. This is something that the Indian government, we understand, is actively looking at. So there is a negative so far as the equity markets are concerned, because this is seen as the fall in crude oil prices seen as a sign of an impending global slowdown. But there are two positives. One, retail price of petrol and diesel, despite a hike in excise duty, has come down. And two, it gives an opportunity for India to actually top up its petroleum oil reserves at lower crude oil prices.